organizations who had some muscle memory around insurance were able to move at just a much more rapid pace. And then also, if you're looking at an industry from the outside, you're more creative, you're not anchored. I was anchored to certain things, still am, right? Because I had spent 20 years in insurance organization. My partners didn't have that anchor. They were more creative and free flowing, but then they also had the cybersecurity expertise that was really important because it's not just an insurance problem, it's a cybersecurity problem as well. I'm Trent Cooksley with Cowbell Cyber, and this is the future of insurance.
This episode is brought to you by the Future of Insurance USA 2022 from Reuters Events, taking place this June 14th and 15th at the Marriott Marquis Hotel in Chicago. Join me, senior executives, and thought leaders from across the industry to transform products and services, tackle emerging risks and ESG issues, and strategize for success in a shifting landscape. With speakers like USAA CEO Wayne Peacock, Allianz Life Insurance President and CEO Jasmine Giroli, John Roach, CEO of The Hanover, Marcus Winter, President and CEO of Munich Re US, Rick McCathron, President of Hippo, and so many more. This is going to be a hugely impactful event. Register today at future-of-insurance.com/FOIUSA to save your spot. Can't wait to see you in Chicago this June for the Future of Insurance from Reuters.
Trent, it's great to sit down with you to hear the Cowbell story and your story. I mentioned you before we were recording. I feel like I've been dancing around you, talking to lots of people who know you, but never actually talking to you. So it's time we right that wrong.
Yeah, thank you. Thank you for having me.
Can you give everyone a little bit of backstory on you? Because, how did you get into the insurtech scene, but insurance before that and your journey, and then definitely want to dig into Cowbell and what the story is there.
Yeah, absolutely. So I started really early on in my career with an early stage workers' compensation in MGA and insurance carrier. After a small stint at the Chicago Board of Trade, trading bonds, and a little bit of banking work, I kind of fell into, I was very lucky, right time, right place, kind of fell into this really early stage company that was building a technology solution in monoline workers' comp. And so we built an MGA and we built an insurance carrier and kind of deployed it geographically where it makes sense. So that's really where I cut my teeth in the insurance space. And we actually had a sign on the wall in the early days that said, we're a technology company that sells insurance. And that was well before the insurtech word was had come about. So
is it possible that you invented insurtech? Because
not me personally, but I might have been one of the early pioneers. There were other ones of us.
When was this?
Early mid 2000s.
Okay. Yeah. So super early.
Yeah. Super early.
Yeah.
And we had a lot of success there. And we grew that company fairly well. And I was just lucky. I got to work in every department. So I managed operations. I worked in underwriting. I worked in sales. I did analytics work, worked in finance. So I really got to see everything.
Yeah.
And we sold that company to Markel in 2010. Mm-hmm. And then I spent 9 years with Markel in a variety of different roles. And really kind of in the mid 2015 kind of type time frame when there was kind of some rumblings. New people were coming into the market space. And before that, I had built out some new divisions for Markel, some strategic partnership divisions. I was lucky to be a part of a team before that built some of the first pay-as-you-go work comp software.
Yeah.
And so that's table stakes today. And as these things were happening, I kind of started to present things to the Markel senior leadership of like, hey, let's really dig in to what's happening here. Then, for a couple of years, we started Markel Digital, Markel InsurTech Underwriters, and Markel Digital Investments over those times. And then 2019, it was just kind of time to do something else. And so I left and helped co-found Cowbell.
And we all know famous SNL quote, need more cowbell. Right.
Cowbell, yeah.
So definitely need more cowbell. And I want to get into that, but I do want to point out for anyone who's read the Thimble case study in the second Future of Insurance volume, if they're like, how do I know his name? If they didn't know you from the Cowbell side, that may be how they know you, because you and Scott were the guys at Markel who were putting things together that supported Thimble and pretty pivotal in that story. So
Yeah, we got
into that.
connected to Thimble through Caribou,
Yep.
and that really took off. So that was part of the Markel InsurTech Underwriters Group. Was one of our
Yeah.
the first deals that we did. Actually.
Yeah, you guys were involved in actually several of either like super innovative ideas or some of the most successful, highest profile ones that have been on the market. Markel's been behind quite a few, like, really central stories in InsurTech.
Yeah, they really have been, and again, a little bit of luck, a little bit of timing, a little bit of grit, and also, we got we were able to get a lot of what we wanted to do prioritized at the organization, and so we had a long leash to be able to explore things, and we also did it with an underwriting mindset. Markel is an underwriting company at its core on the insurance side, and so that allowed us to really explore a lot of different areas and kind of control the risk at the same time, but deploy capital in a lot of different ways. So I was really lucky to meet some of the some of the premier folks that have grown some significant businesses in the space over the last 4 to 6 years.
Was it all of that exposure that led you to feel like, I could create something on my own? Or did you always have that itch? Like, how do you go from, because you had sort of the entrepreneurial thing with that first startup, MGA, that Markel acquired. Is that what you wanted to get back to?
I did miss building.
Yeah.
And the excitement around that. But when things are going well, which they were at Markel, that's a hard transition to make because I was very happy, and it's a great organization, and I still have a lot of colleagues that I speak to all the time there. But I just was kind of thinking, I'm going to try something else.
Yeah.
And so that was kind of like the trigger. I didn't know exactly what it was going to be. I had met Jack, my partner and our CEO, at the Global Insurance Accelerator in 2018. Or in the fall of 2018, and there were some synergies there, and it looked like there was some opportunities to really build something.
So tell us about that. How did this all come to be? How did you get involved with it? And Jack's not here, so he can't defend himself. So you can tell us his side of the story too. Yeah.
So I kind of put an exit plan together with not exactly sure what I was going to do, and just kind of was going to see what happened. Previous to that, I'd been talking with Jack and all the other organizations that were in the cohort of the GIA that year. I was on the board, so I would get involved as much as possible in that group. And one day, Jack called me and he was like, "Hey, we were talking about this last time. What do you think of this?" And I said, "Wow, there's a lot of really interesting things here. Let's meet up and kind of whiteboard some of this stuff."
Yeah.
And he actually drove from Des Moines. Jack was in California, and he was flying to Des Moines every week. And I'm in Omaha, which is about a 2.5 hour drive. And he said, "Well, I'll drive to Omaha." And he drove to Omaha, and we just kind of whiteboarded all afternoon. And this was kind of towards the end, after the GIA had kind of finished. He had gotten done getting his PhD in insurance at the Global Insurance Accelerator. And afterwards, he's like, "You get to do this thing with me or what?" And I said, "Well, I don't know if I have a choice anymore." And then so I just jumped in, and we just started building from there. And at the same time, Jack was working Rajiv Gupta, who is another one of our co-founders, really focusing on some of the technology side. And one of the reasons I was really excited was because I was very interested in cyber because of the growth prospects that were there, but also because of the challenge that was presented, right? So a lot of early on doing work comp, doing a lot of small business, that was kind of where a lot of people were focusing. Low hanging fruit, really big TAM, completely makes sense. But cyber was really evolving, and it was changing. And it was a technology problem as much as it was an insurance problem. So it just seemed like a bigger, more complex problem to solve. And I was not a cybersecurity expert, I knew a lot about insurance. I knew a lot about technology and insurance,
Sure.
but definitely not a cybersecurity expert. And, Jack and Rajiv were cybersecurity experts that knew nothing about insurance. So
Right.
there was also a really nice fit because in my what I had seen was that the organizations who had some muscle memory around insurance
Yeah.
were able to move at just a much more rapid pace.
Yeah.
And then also, if you're looking at an industry from the outside, you're more creative. You're not anchored. I was anchored to certain things.
Yeah.
Still am, right? Because I had spent 20 years or whatever in insurance organizations. And so, my partners didn't have that anchor that I had. So they were more creative and free flowing, but then they also had the cybersecurity expertise that was really important because it's not just an insurance problem. It's a cybersecurity problem as well.
Yeah. Yeah. It's interesting, the perspective, having that more well-rounded approach, like both sides of that coin that are so critical in cyber. Because you do hear this debate from, some of the startups that are purely no insurance talent whatsoever, intentionally, because they're like, we need to move fast and that'll frame us in or slow us down. And then you have people who are purely insurance talent, that like the way MGAs used to start, it was someone who was already in the industry who broke off to do their own thing. And that's great. And they can move fast and they're, focused in on something. But, then they're maybe missing the freedom of the outside viewpoints. And then I see folks who have that balance, either in-house or they built a really strong network of supporters and advice, like Timble's, they didn't have the insurance talent in-house, worked really closely with you and Scott and others. Here, you got to see all of that through your exposure at Markel and obviously some of the things you're seeing at the GIA. Were you aware of that going in, that actually, like, despite the hype, the real answer is you need to have it all?
I mean, that was the intention, but I didn't realize how important it was until just some of our first meetings, right?
Yeah.
Like when we got the core team together, when we raised a little bit of money and we were like, here's our timeline, here's our deadlines. We'd be discussing different problems or opportunities or challenges that we were trying to overcome. And some of them were very easy for me to answer. I was like, well, this is the way we could do it. We don't need to innovate here, right? This is a regulation. So let's not even worry about that because, we're not in the business of, we weren't trying to fight regulation. We're not trying to change that, so we were able to move like past some of that stuff that I probably saw some of the investments that I had made at Markel where, they spent a lot of time like, oh, we've got a solution for this particular problem that we were facing, when the solution wasn't going to work because whatever, right? Regulation is an easy one to point to, but it's not just that. It's maybe just like thinking through how risk bearers think about risk, right?
Sure.
And maybe some of the dichotomies between premium growth and capacity risk and underwriting and what that means. So some of those things they're not new to me, and so we could kind of skip through them and then really build solutions around we have a lot of partners, right? And also kind of going through the reinsurance process and going through the funding process and the reinsurance process. You'd think, okay, well, I'm running a process here, but they're very different, right? And so there's some fundamentals that you just had as an organization because you just had that experience, and I think it's really, really valuable. Now, on the flip side of the coin, I had also seen some early stage companies have that experience, but maybe one side or the other wasn't open-minded enough to break the anchor. Right? Like I had to do some things that I was like, I was like, oh man, makes me uncomfortable, right? Like, and we did it because that's what we needed to do to move fast. And if you weren't willing to do it, we wouldn't have been able to, maybe move as quickly or, solve some of those problems. So I think it's really valuable. And I when I do some advising for some other companies, I always say, have somebody who just knows a little bit about the industry.
Right. But you're pointing to something else, is like just having the person's not enough. And this is something that Martha Notaris brought up, and actually like talking about your team in particular is a great example of that. is she wants to see founders who can challenge each other, and obviously doesn't ruin everything when they do. That's part of the dynamic, is the way that, if one of them stuck, they can raise their hand and talk about it. They can challenge the others, or if there's disagreement, how is that carried out, and what's the impact on the decision making, but also what's the impact on the company? Like, can it survive challenge, and can it survive without challenge? So, talking about the dynamic amongst the founders as being so critical. So even if everybody had the perfect backgrounds, doesn't matter if you can't bring them together.
Yeah, 100%.
And I'm guessing like you kind of got a long dating period with Jack, and like just through the GIA process, like you knew what you were getting into long before you got into it. So I get why when he asked, it's like, yeah, I don't really have a choice at this point, right? It's kind of obvious.
Yeah, we had gotten to know each other as people, right?
Yeah.
And like our past experiences. So we spent a lot of time, because we spent a lot of time together without a plan of partnering.
Yeah, right.
So we were just Jack makes the joke that after he applied for the GIA, and I kind of went back and gave my whatever report that I did when I watched the application videos, that he called me, and I never called him back. But I'm not sure that's exactly true. But just a joke we talk about. But we talked a lot before we really got in, like, let's really whiteboard this out. And I just kind of said, if I were doing it, this is the way I would do it. What do you think of this? And where are you coming from here? And there was a lot of things that clicked. And actually, we had our official 3-year company anniversary was in January of the actual formation of the company. Now we really started moving in August of 2019. But we had a little event for the company to celebrate that. And I pulled up a picture of that whiteboard.
Wow.
And kind of just said, hey, there's a lot of things on here that we're actually doing today. Some things we aren't, but there's a lot of things that we are. And kind of gave that story. So it was a good anchor for how we got to be where we are and how we're going to be.
And to be fair, there's been quite a few changes in the world since you guys wrote up that whiteboard. So it's probably fine that you're not doing everything that was on there, or some things that weren't on there are being done.
Probably, the world's probably changed at one of the most rapid paces in the last couple of decades since we started the company, for sure.
Yeah. Well, Trent, I do want to dig into a question that, as an observer in the space, and someone at this point who has friends and former colleagues who are at several of your competitors, it seems like everyone is sort of fanned out into everyone that I knew. And so maybe it's me, but like, they all ran away from me and ran into cyber startups. There's a lot of, again, from the kind of outsider view, there's a lot of what sounds like a very similar story in a number of the cyber insurance startups around using tools to catch risk proactively, to intervene, to protect, and then to add in coverage in there as well. Obviously, not everyone's the same. You're not all doing the same thing, but high level, I'm trying to sort out what is the difference between the various cyber startups, which are quite different from the traditional players. And I worked at Beasley and Hiscox. Like I've been in the cyberspace myself, but not in that kind of holistic approach. Like you're saying, it's tech and it's insurance. But the startups do seem to be all going about this same like tech plus insurance kind of solution. What is it that Cowbell's doing that's different? Like, what is your theory on this?
So if I step back and just think about cyber specifically, and I think one of the reasons why there's a cohort of organizations that have a lot going on is, again, back to that, that the market itself is changing at such a rapid pace. That the problem is big, the opportunity is big. So I think there's a lot of ways to slice it. And secondarily to that, as you're trying to kind of meet those changing demands, I think that's why you're seeing a lot of activity there. If you just think of if you look at property cat modeling and you look at cyber cat modeling, it's very interesting because a lot of the cyber cat modeling is based on property cat modeling, but the property risk doesn't change overnight. right?
Right.
It changes maybe it changes quite a bit over time, over
Yeah.
long periods of time, but you've got a lot of data. And you've got, a lot of models that are, fairly consistent with the outcomes that they're putting. In cyber, it's like changing on a daily basis. I can model a book in January and then model it again in February, and you may get very different outcomes.
Yeah.
And so, that just, I think, kind of gets to the complexity of the risk. So what we and then I think there's, when you peel back the onion of that, there may be opportunities to expand that, across a really ever-changing landscape in just the world today that moves at a fast pace. And then there's also just the fact that a lot of organizations' digital assets are now their most important assets, maybe not as much their physical ones. And even the ones who are in a physical world have really important digital assets that are really important for them to operate their business. It's obviously something that is on the minds of the board members of organizations, enterprise risk management, et cetera. And so it's becoming really, really, really important. So what we've done at Cowbell is, one, we wanted to do a lot of the scoring and the modeling that we do based on what we know, and bringing in a lot of data from the outside. So, some people use third-party data providers. We do that as well. But a lot of our models are, we've built them. We've built a lot of our own scanning, and kind of how we want to look at the risk and look at the marketplace. We're monitoring right now 23 million businesses in the US on a continuous basis. So continuously assessing from an outside in perspective, where their cybersecurity stack, what it looks like, how they score. So if someone comes in to submit or ask for a quote, we maybe already have a little history, which also defines our models. And we also wanted to build a really vertically integrated platform. So everybody within the value chain is working from the same data set, where a lot of data has been normalized, and then our machine learning models are continuously running on all of the inputs that are coming in. So that goes from, early on we said, I've looked at, this happens in all lines, but especially in cyber, there's a lot of information asymmetry between what the policyholder was giving to a broker, what a broker is giving to an underwriter, what an underwriter is giving to a reinsurer. And so that whole flow, there were a lot of gaps. So we really wanted to close that. So everybody in that value chain for us is working kind of within the same data set. And then inputting back into that. So when there's claims, the information that's coming on a new claim is getting inputted back into our models immediately. We're a better underwriter tomorrow than we were yesterday, because we're able to evaluate new exposures that have new vulnerabilities that have come up, and so those are some of the things that that we're doing to kind of tackle the risk.
You just laid out like all these things and like not downplaying what you do, but you sort of like rattled them off. And I think for people who don't know the space, like, you see the claim comes in, it's in your models, great, that's part of your rating. I don't think people generally know the way it works, which is like once a year, a carrier will sit down and look at the performance of different years of account and make a decision about whether they need to update their rating or not. And like it's not real time. And for most carriers, claims and underwriting aren't talking, or, it's sort of like on that one account where there was a claim where that one underwriter and that one claims person talked about it, but there's no kind of programmatic way that knowledge is flowing back and forth. And having run a claims team, and an underwriting team, knowing the connection between claims and underwriting, if your underwriters know how their risks are playing out as it's happening, and your claims people know what's coming in the door as it's happening, that's just so unbelievably valuable versus waiting until quarterly reserving processes or once a year when you relook at the models. It's like you just kind of laid it out, and people may not catch that, but it's actually a huge shift in how most of the traditional underwriters would have approached or do approach this space and others, where it's not as real time. And that's actually a pretty fundamental difference.
It's not always real time, but not only that, a lot of times data that is coming in through each one of these, different areas isn't actually leveraged. So
Right.
if you think about just like little aspects of a claim, if you're not normalizing that data, putting it into your data set and letting your models work with it, you're not using it. Right.
Yeah.
So maybe the examiner or the adjuster's using it, and they're maybe talking to an underwriter. We're seeing a lot of this, or this is we're getting reports and we're delivering that. But it's really extra critical in cyber because of the movement. So tomorrow we may have a new 0-day vulnerability. We have one happening right now. I mean, like there's a worldwide event happening where there are cyber attacks going on between nation states. And how do we play into that? How do we monitor that? What is the exposure that we have, if any, in those kind of things? What data can we use? So this is basically a new event, right?
Yeah.
There was a log floor shell, a couple of weeks ago, right? And that was the latest new event. How can you react to that?
Yeah.
Immediately? Not react to your point, Bryan, well, let's ask another question on the application. And then let's, at the end of the quarter, we'll go back and we'll see what our losses were. And now we need to adjust price. Our models actually adjust price in the back end in real time based on our own scoring. Yeah. So we're kind of looking to accurately price the risk in real time rather than again, quarterly or sometimes twice a year, right? For some folks, and again, it's extra critical in cyber because of the movement of the market. But then there's a lot of exciting things there when you think there's a new vulnerability yesterday, and I've already addressed it in my underwriting tomorrow. Right. Yeah. So, we call our AI underwriting bot assistant Moo. And Moo will give alerts to underwriters by saying, this potential risk has this, they may be exposed to this vulnerability. It may be something you want to look at. Yeah. And so then also we can direct our underwriters to look at what's most important rather than just going back to the Bible, right? And what do I do every day, right? Yeah. And we think that's really critical in our ability to continue to provide a valuable service back to our policyholders. I mean, and the other thing that we do is we talk a lot about risk engineering and the services that are provided pre-breach, post-breach, but also our continuous assessment. And so identifying vulnerabilities, working with our policyholders on an ongoing basis to address issues that may be coming up or just help them with understanding what's going on. And that's obviously a value add for everybody. It lowers potential losses, lowers potential claims, and it helps policyholders mitigate risks. And we tie a lot of that scoring to what it means to their enterprise risk management and their insurance and their risk transfer, not just their cybersecurity.
Yeah. All I can think about as you're saying that is like property underwriters know there's a hurricane coming to a part of the country, trying to get a list of all the accounts that they're going to be exposed on and how difficult that generally is. So it's like, these are fixed things. We know exactly where they are. We're supposed to. We know what's at risk geographically. It's much more tangible. And that's still something a lot of property underwriters struggle with, depending on systems and how granular their data is and whatever. So to be able to do what you're doing effectively in real time with the changing risks that are coming in and how unknowable a lot of it is, like to know if someone's truly exposed to something or not versus like, this is the path, potential path of the hurricane. We don't know exactly where it's going to hit, but we know who's at risk. It's a different world in cyber. So to be able to do that is, orders of magnitude harder, but unbelievably valuable because everyone's effectively, potentially getting hit by these things.
Yeah, absolutely. And then, another just kind of a last point on this this kind of overarching theme is we have what we call our connector platform. We have Cowbell RX, which is we partner with a lot of different cybersecurity firms, so we can direct. Hey, we vetted these companies. You want to implement MFA? Here's an organization that we vetted with our security professionals, and we'll help you with that. And then also we have a connector platform where with a one-click API login. you can log in through the Cowbell platform as a policyholder to a third party security provider that you already use, or one of your cloud providers. And then we can kind of help manage, you actually have more exposure on your policy in these areas than we thought you did, or that you thought you did.
Right.
And then we can give advice and recommendations back to the policyholders on kind of how that stacks up.
Yeah.
And then that's been been really well received in the marketplace, and we have a lot of IT professionals within our policyholder set that have really been leveraging that.
Yeah, I can imagine. I'm trying not to think about my exposure because I don't have any, so don't hack me. Not to you, to anyone who's listening.
Everybody has some.
Everybody has some. Every business is a cyber exposure today, and it was years ago, but like when a guy came to do an estimate for like lawn services when we first bought our house, he's walking around with his iPad, gets in his truck, and I've got the whole estimate beamed over to me. I'm like, that doesn't feel very cyber exposed, but it is. It's customer data. It's going through networks. Like even something as little as that, like there's exposure everywhere, and that was 2008. So like things have changed. There's a lot of social network didn't exist. A lot of transactions weren't being done online. It was a long time ago. So yeah, everyone has that exposure, and everyone's got a media exposure as well, every business. I do want to ask quickly on like structurally, how are you set up? Like a lot of the insurtech carriers are not actually carriers, they're MGAs. What's your structure, and if you can share, what are your thoughts about that going forward?
Yeah, so we're a managing general agent. We also have a captive reinsurance company, so we do share in some of the risk with some of our partners, which we believe is important to have some skin in the game with our reinsurance partners on what we're delivering to the marketplace and to our policyholders. But MGA is how we're set up, and it's there's been a really interesting evolution shift in how people think about being a carrier. Then I'd say in the last 3-4 years has been like almost a 180 in how the markets interpret it. Now, the public markets, that's been a different story lately. But there just overall, there's just been a kind of a different eye on that. So, I think there's the reason why we have all these models is to leverage expertise of what an organization can do, right? Maybe a GA general agent works for someone. Maybe just being an MGU makes sense for someone else, and maybe being full stack is the right pathway. So there's a lot of puzzle pieces to that, and I don't have that this is the right way, because the risks are different, the markets are different. Insurance is a broad term, right? But it's very different if you're, running an ILS fund, or if you're, underwriting, Main Street BOP business, right? So I think the evolutionary shift on how people view the risk-bearing entities has been interesting. And I think one of the other reasons why that shift has occurred is just because of the moat that has created for the incumbents in the space, right? The regulatory moat that you have, you just don't start an admitted carrier from scratch and you're up and running. There is a significant amount of work and capital that gets put into that. But I do think that the insurtech evolution will see more organizations move to taking on more risk, because that's the insurance carrier model. And maybe a rocky road to get there, because you learn some lessons along the way. But then you do have some of that moat, and you gain some other advantages by doing that. And one of them is discipline, but the other one is how you can leverage that capital to do other things. But it also, for some people, it makes sense to stay in MGA forever. I had talked to a insurtech, before insurtech, but a founder of an MGA that moved to a carrier, and that individual will never do it again. Right. And then, I've seen the other things happen as well. So it's been interesting to watch.
Yeah. I think that's a very underwriting informed response. Whereas, sometimes it's, and maybe it's different the past month with the way the public markets have viewed some of the insurtechs. But I asked that question a year ago to another founder who at that point was full stack, and he's like, everyone's going to be full stack by the time they're done. If they're an MGA, that's just the in between. And obviously not talking about like the MGAs that you were a part of before, or that you would see like at target markets, like the original way that the MGA model existed, not as a stepping stone to become a carrier or being an insurtech player. He just saw it as a foregone conclusion. If you're not a carrier, it's that you're not a carrier yet, and you're just working towards that. But to me, it was sort of like, maybe there's other reasons why that's not necessarily the only answer or the best answer for you. And for some, like maybe it's a digital agent. Like there's different models for different purposes, and that's fine. But yeah, I appreciate
I do think there's some disruption potential to the incumbent space from in insurtech who become a carrier, and I completely understand why someone gets in, maybe has come from the outside, and says, I have too many, I got too many hands in the pot. I have too many mouths to feed. I don't have control of my product, right? I don't have control of, how maybe I can innovate on that product. And those are very real. And so you do get some flexibility if you're willing to take the carrier route. But you also get some new constraints, right? Sometimes maybe you're trading one devil for another, right? But if you're prepared for that and you can execute, and that's probably key, for a lot of things, right? If you can execute really well, you can make it happen. And I think there will be opportunities for the people who take that path, and opportunities for the ones who don't. Fee-based business is good business as well, right?
Sure. Yeah. Trent, before I let you go, I always ask everyone about, where are things heading? And when I don't frame it, some people will say for their company, some will say for the industry, or I actually don't care. I'm just curious about people's thoughts about, whether it's for themselves or the industry, what's to come, and how are you thinking about that? So if you want to make this general, you certainly have the background to speak broadly. But if there are things specifically that Cowbell sees going forward, I'd love to hear that too.
Well, I mean, for Cowbell, we're going to continue. We're going to continue on our path, really looking to solve the cyber problem that exists in the market, and maybe
cyber's in your name. So you're not saying like, and these 15 other risks, or maybe you don't want to comment on that, but like
we're digging really deep into cyber. Yeah, we're digging really deep into cyber. We think it's a big enough problem. It's a big enough market, and that's kind of where our focus is. And that is unique. There's some innovation in our product. There's some innovation that I think we're going to build in our product that's going to be really exciting. More broadly speaking, I do think I'm going to be interested in watching that transition that you just talked about, from going full stack, and how folks do it. And then maybe how they continue to take market share. The one thing that I also think will dramatically change at some point, and I don't know what the timing of this is, but in a lot of insurance markets, the market is hard. And so as the market moves through the hard and soft cycle, you see different reactions. So like there hasn't been a lot of carrier acquisitions. And I kind of liken that to the hard market, because carriers can do well in a hard market, especially been around a long time, right? And you're okay. You're not in you don't need to grow, but you are growing. They have a lot of flexibility. When the market becomes soft, that's when you kind of start looking for innovation. And now this is kind of specific to certain lines, right? Because some line could be hard and another line could be soft. So I think that will change the trajectory and the tone also of the insurtech wave. But one thing that I know is insurance in and of itself is not going away at all, and it's only going to grow, and it's only going to become more important. And I think in our volatile world right now, it's one of the things that's kind of a rock to help us trade and have commerce and make it through some interesting times.
I do find myself kind of getting teary-eyed almost, but like reminding people why we exist, because we do get caught up in either the constraints and the frustrations about that, or the kind of like jokes about it being boring or slow or whatever. but like, it's worth coming back to the point you were just making is ultimately really nothing happens in this world without insurance behind it, like directly or through a connected chain. There's insurance behind everything that's happening anywhere in the global economy. And people going to bed with their head on a pillow at night and knowing that's okay, and we can wake up and face the day. Like, ultimately there's protection behind that. And like,
insurance is I don't think insurance is boring at all. Maybe I'm biased, but
doing fun
it's so
stuff.
Complex and it's so new, and there's things changing all the time. I actually had one of our engineers, brand new to insurance, he's been with us for a couple of months, called me and was like, there's so many interesting things, and like, it's kind of more rabbit holes. Like, wow, I'm learning about this, and I thought that would be over with, and now I'm in 2 months, and I'm like, well, 2 months isn't even very long. So you got you've got a long ways to go, but it's complex, which makes it which actually I think makes it exciting. And I say the same thing, Bryan. I think that we're working on a problem that is impacting people on a daily basis. It's important. And we're solving problems that are important for our nation, and for our protection. And so we can continue to do business in a multitude of different ways.
That's awesome, Trent. I really appreciate you sitting down, and it's great to finally, not just talk about you, but talk with you. So I appreciate the time that you gave me tonight.
Yeah, thank you. Really enjoyed it.
Hey, thank you to Trent and to the whole team at Cowbell. It was great to sit down with him and hear his side of the story on the creation of Cowbell, but also for me personally to dig into the other half of that dynamic duo at Markel that was on one half of the thimble case study that I wrote about. And obviously they were involved in the next story as well. So I feel like I've kind of been tracking Trent for a little while, not stalking him, tracking him. It's much safer. But, just understanding some of the things that he's gotten to witness firsthand. He talked about his comp experience and startup there, and insure teching things before that was even a thing. They had APIs out before anyone was doing it, that while they were maybe clunky at the time, are still probably ahead of where lots of folks in the industry are. So, he's been at this forefront of so many different things in the industry. And then obviously the kinds of things he got to see at Markel, very, very cool. But what they're building at Cowbell, it's interesting stuff. Cyber is huge. It's super complex, and it's more than just insurance. It's more than just tech. I love the way they're thinking about the connection of those two. And there are others thinking about bringing those two pieces together, but I do find some things that are different in how Cowbell specifically is implementing that. And, having the depth of insurance expertise in the conception of the idea as an insurance person. And as I know many of you are, you get why that can matter so deeply. I've really loved the time with Trent. We actually stayed on the Zoom for like another half an hour after we were done recording, and realized if we didn't check ourselves, we'd probably be there another 4 hours later. But great guy, great story. Love what they're doing there. It's super cool. And so thankful for, getting the time to spend with him and hear about Cowbell, and all the best of luck to them, the success they've had. I hope it continues to build. Thank you to all of you for tuning in, for listening to another great conversation. I hope this was interesting for you, and hearing a little bit about a space we haven't really talked about on the show yet, the cyberspace. I hope all of you enjoyed this one. And, also a shout out to the team at Reuters Events, Future of Insurance USA and AI USA, two great events you can get to at future-of-insurance.com/AIUSA or /FOI USA for Future of Insurance USA. And you can go register today. Incredible events. I'm honored to be chairing them. So if you go, you get to see me. That should be reason enough, right? Like, why else do you need to go to? Well, because there's all these amazing people who are speaking, the folks that the Reuters team is able to get to come and to speak and to share what they're working on is unreal. I'm still kind of reeling from the speakers that are going to be keynoting at Future of Insurance USA, like Wayne Peacock, CEO of USA. That's huge, 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 huge. Okay, I'm going to leave it there. Thank you to everyone for tuning in. I hope this was valuable, and I will see you next time.